Hello, I'm Patrick Manzi, Chief Economist with the National Automobile Dealers Association, here to give you an end of the second quarter economic update and an outlook for the rest of the year. New light vehicle sales in June totaled a SAAR of 13 million units. Now this was up a little bit from May, but down about 16% year over year. Now that brought the quarterly average SAAR to a total of 13.4 million units, down slightly from the first quarter's average SAAR of 14.1 million units. At the start of the year, we expected that we would see sales improvements each quarter steadily throughout the year, but continued supply chain disruptions have limited the pace of inventory accumulation and thus sales. Inventory levels have been fairly stable throughout the second quarter, and they ended June at a level of 1.22 million units on the ground and in transit. Now this is down fairly significantly year over year, but up about 8% compared to the start of the year, and it's moving in the right direction. This is what we want to see. Now for the rest of the year, we do expect there will be slow inventory accumulation, and that by the year we should have inventory levels on the ground and in transit somewhere in the range of 1.3 to 1.5 million units. Now this is positive news, but it still means that we're going to be dealing with this tight inventory environment for the rest of this year and most of 2023. In June of 2022, average transaction prices continued to rise for new vehicles. At the end of June, according to J.D. Power, the average new vehicle transaction price is expected to set a new record of over $45,800. Now, prices have risen because OEMs have prioritized builds of higher trimmed and thus higher priced models. OEMs have also significantly cut average incentive spending across the board. Now, incentives have fallen to a level below $1,000 on average for the second month in a row, and J.D. Power estimates that average incentive spending per unit is going to total $930 in June, close to an all-time low. With prices of new vehicles rising, it's no surprise that average monthly payments have also increased. At the end of June 2022, the average monthly payment on a new vehicle finance contract is expected to total $698. This average monthly payment is up 12.8% year over year, or roughly $79 compared to June of last year. The Federal Reserve has been raising interest rates throughout the year in an effort to combat high inflation throughout the economy. At the end of June, the average interest rate on a new vehicle finance contract is expected to top 5%. And this means that as the Fed continues its increasing interest rates throughout the rest of the year, that this interest rate environment is going to shift from a tailwind for vehicle affordability to a headwind. We should see average interest rates on new and used vehicle finance contracts back above our pre-pandemic levels before the end of the summer. Now, one bright spot, though, for vehicle affordability has been strong used vehicle values, and consumers with a trade-in have benefited from this. J.D. Power estimates that the average trade-in equity is going to top $10,300 in June. This would be the highest on record and the first time that average trade-in equity has topped $10,000. Now, because of sales coming in below expectations and the slow build out in inventory levels, we have reduced our new light vehicle sales forecast for this year. We now expect that new light vehicle sales are going to total just 14.2 million units this year, down from our original forecast at the start of the year of 15.4 million units. Now, there still could be some surprise risks here from vehicle production. As we've seen so far, production has been disrupted by the war in Ukraine, shutdowns in China due to COVID protocols, and just other delays in shipping key inputs to production around the globe. But still, despite this sales forecast cut, we remain very optimistic. We still expect that 2022 is going to be another very solid year for America's franchise dealers. The U.S. labor market has added 2.4 million jobs through May of this year. And just to put that into perspective, that 2.4 million jobs gains is higher than any full year experienced during the 2010s. And through May, we are only 822,000 jobs shy of regaining all of the jobs lost to the COVID-19 pandemic. Given all of these job gains, the unemployment rate sits at 3.6% as of the end of May, and this is just barely above the all-time lows experienced leading up to the pandemic. Now, real GDP contracted at a rate of 1.4% at the end of the first quarter of 2022. Growth is expected to contract again in the second quarter. Given the contractions in real GDP in the first quarter and the expected contraction in the second quarter, we have reduced our overall real GDP forecast for the year. We now expect that the economy will expand by 1.5 to 2% throughout 2022, down from our earlier estimate of 2.9% at the start of the year. And that concludes my economic update wherever you are. I hope you and yours are safe and well. And be sure to check out the new and improved NADA.org for all sorts of news on the auto industry and the broader economy, and lots of tools to help dealers run their business better every day.